Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, June the 7th. The year is 2023. Let's talk trading. Self-talk with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, right before we started this video, we were trading and we were going short and price was moving up. I think it was up in around in the 70s, and now it's down in the 50s. And what did I say? Something about, we should just shoot. Do you want to shoot yourself or something? But the thing about but the thing about self-talk is, I read an article maybe a month or so ago, and they said that, you wouldn't talk to anybody else the way you talk to yourself sometimes, so you shouldn't talk to yourself like that, because that can really weigh heavily on what you're doing in the moment and in the future.
Yeah, I would agree with that. Sometimes we are our worst enemy. And I don't mean just because we enter into a trade that we shouldn't, or we don't exit out where we should, but just exactly what you just said, the way we talk to each other, the way we, rather the way we talk to ourselves, that little voice that you hear in your head when you're sitting there, in front of your trading screen by yourself, or even with a buddy. You just, you're so, I hate to say it, but you do mean to yourself sometimes.
Well, yeah, okay, I'll bust you. How many times did you say today I'm being stupid?
Oh, half dozen times. And the thing is, let's put it this way, I've been in only 3 sets of trades, and I said it a half dozen times. So what does that tell you?
Yeah.
And only one of those trades was one of those that was an in and out.
Yeah, I know.
But, and it's like, we do that to ourselves, and it clouds our judgment. It messes up our confidence. The problem with it is we sit there and we beat ourselves up. You just whip yourself to death, right? And the problem with that is, what happens is, you start doubting everything. You start doubting your method. You start doubting the plan that you spent so much time putting together in terms of money management. You start doubting everything there is about trading. And then what happens is, you then go and because of that, you pull a trigger, whether it's an exit of a trade, an enter a trade, and you're doing it reactionary, and as opposed to following your plan. And then when it fails, you said, "See, look, I told you, you stupid." And it just feeds on itself. Some people can, I did, when I was doing, missionary work and things along those lines, and pastoral care and things along those lines, there's 2 groups of people, and very few people in the middle where we're all supposed to be. Like most people, either they just talk themselves to death, or on the other side, they exude overconfidence to the point of, irrational. And either one of them can be deadly. But the one I think that's most deadly is when you go and just, self-talk yourself into a position of, just self-doubt on every single thing that you do, because it affects everything in your life that way. And not only it affects your trading life, but it affects even your personal life outside of trading. By the way, guys, we're supposed to have a life outside of trading.
What's that, right?
It's not supposed to be all about trading, because when it becomes that, why are you doing it?
Yeah.
But you just go and talk yourselves into a position of that we actually kind of create our own mistakes and our own problems, because we're not following the plan that we put together. And that's what it all comes down to, is you got to go and have a plan, and then once you're in the plan, you need to execute the plan. Well, the problem is, you may have the greatest plan in the world, you may have the greatest method that's ever been, created, and it's perfect time for this plan to even be implemented, But if you're self-talking yourself and self-doubt and you're not executing the plan, well, yeah, it's going to fail. And that's why, there's so many people out there that say, well, how are you possibly making money doing that? You got to get cut up. You got to be this. You got to be that, right? How many times do you hear that? And meanwhile, the guy could be sitting right next to you, and he's making money, and you're not, or vice versa. It can go either way. Well, a lot of times it comes down to what's going on between the 2 ears, and are you actually going and thinking about what's going on, paying attention to what's going on, going and actually, executing what's going on based on your plan, and not allowing emotion to take control of you, not allowing, yourself to go and talk yourself into a doomed position. And the next thing you know, you go and put yourself into a position where, you're taking losses where you shouldn't be taking losses, and you're cutting winners, before you're supposed to be cutting the winners. And it just, adds up.
Yeah, and the thing about it is that a lot of times the self-talk is based on something that happened in the past,
Yeah,
So it's like, that's the old woulda, coulda, shoulda stuff, and then you beat yourself up. Or like, like you say, or sometimes you're in the present moment and you're talking about, oh, I'm being stupid, and
Yep.
or the other one is, you're talking about in the future where you might say something like, I'm not going to make that mistake again, or I'm not going to, you're going to alter, you say you're going to alter something in the future, and then that future becomes the present, and then you don't do it, and then you start calling yourself stupid again. And so it kind of loops back on itself, and you got to be real careful. And I put up a 1 minute chart to show yesterday's high. And if you look back, let's see, 1, 2, 3, 4, 5 candles is when you could have taken that long. And then the thing is, you would have gotten in that trade, it would have gone up, and then it would have gone against you by a couple of pips. And those couple of pips that it went against you, chances are, you got mad at something.
Right.
And then all of a sudden it comes back up, and as you can see, there was an opportunity to take a pip or two, maybe two, a pip, maybe one, almost 2 pips. And then what happened was it dropped right back down to that daily previous day's high, and then it bounced up. And right there what would have happened is maybe you took the 2 pips, maybe you only took 1 because the candle started going against you. But then right here at that daily high, you didn't get in. Or had you not been in, maybe you went short at that previous day's high. And then it turned around on you, and then, you put yourself in that tailspin again. And it's just like, well, you could say something like, well, it was at the line, indicator 2 was magenta, I was on a red candle. But then if you look, maybe on the multimeter, you look at another chart, you could have seen that, hey, well, M30 was green, but H1 was red. It's just like, what do I do? And then you start scrapping your plan, and it's just like, once again, you put yourself into a tailspin. So you just got to be really careful how you talk to yourself in trading. It should be, maybe you're reading your trading plan either out loud or, silently to yourself when you go, okay, candle color count, indicator 2, flip-flop box, state change, and you just go over the things that you normally look at. What's the current range right now on the candle? What percentiles is it at? You have a whole checklist that you just keep going through, so you don't have a chance to start doing that negative self-talk. You just focused in the present on your plan, and you just stepping through it.
Yeah, and that's the thing, and part of your plan should include, I just thought of this just now, and that is, what do you do when you don't know what to do? So my point is this, there are times when you're sitting at the chart and you're in a trade. I'm specific.
Oh, top of the hour, by the way.
Yep. Yeah, and a nice little 4 or 5 pip run up, which was nice. Out of a flip-flop box, state change, above indicator 2. Everything about it was nice.
Yeah.
It would have been a nice, easy trade. But, what do you do when you're in a trade and something happens on the chart and you don't know what to do? What do you do at that point in time? There really aren't very many options, to be honest with you. You can get out of the trade, you can stay in the trade, or you can hedge the trade. Those are really your only 3 options. But you really should have some type of go-to at that point in time. And the reason why I bring this up now when we're talking about self-talk is because what can very easily happen is if you don't have a plan on what you're actually going to do under a particular set of circumstances, what's going to happen is that self-talk is going to creep in, and you're going to start doing silly, ridiculous things, maybe, going and telling yourself that you're inadequate because you didn't know what to do. I mean, and the thing is, even after you get out of the trade, it can continue, and some of us, will go and lament on how ridiculous it was for me to get out at this one time. Oh man, I got out and I only got out with, 2 points or 3 points. And look at it now. I could have actually made 5, 10, 15 pips.
Yeah, that was us today.
Exactly. And it's like, sometimes that happens, and you can't do that because what it's going to do is the next time you get into a trade, and you get that same point where you're up, maybe you're up 2 or 3 pips, and that's all you're up is 2 or 3 pips, okay? But everything in your trading plan says, this is the place that I exit. And you say, well, I remember, just go back to what you were saying before, I remember the last time I did this, and I exited, I only got my 2 or 3 pips, and the next thing I know, it ran, and I missed out on an opportunity to get 15. No, you can't do that. Your trading plan says to do this. Stop self-talking yourself into disaster. Yeah, it could work out. No doubt about it. I mean, right now the market's moving down, right? The reality is I don't know what it's going to do next second. It may continue to go down or it may go up. And you can't go and just base everything off of, what happened in the past. Now, your trading plan should really look at the past statistically, overall, not about what happened in the last minute or so, but overall, what does the market like to do at certain places? That's what you build your trading plan on, not on what happened the last time you were in a trade, because the last time you were in a trade, is just one data point.
Yeah.
One data point is statistically, it's just statistically, we're trying to think of the word, but just.
It's not significant. It's statistically insignificant. Hey, there's one thing. Let me point out to the traders out there, if you're using indicator 2, there's something I noticed a few days ago, and I've been observing it. If you look here, you can see price came all the way up here to 68, and if you look at where indicator 2, it was down at 64. Well, the last time price was at 68 at that level, you can see there was some indicator 2's dots here that were higher. So basically it was putting in a higher high, was making a lower indicator 2 value. That's negative divergence. That kind of signals the short. And look at what happened if you would have taken that short out of the flip-flop box or at the 10% fib retrace there, anywhere at 67, 66. You'd be up 8 pips or more. So anyway, fellow traders, next time you're trading, just remember, to treat yourself like you treat anybody else. Don't treat yourself worse because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.